Good morning. I hope you're doing well and welcome to today's edition of our daily market update. The presentation is called 600 Seconds of Trading, and my name is Alejandro Zambrano, Chief Market Strategist with Trade Captain and AmanaCapital.com. I hope you're doing well. I hope you are winning. I am winning, mostly because I had a very good night's sleep, which is really important when you trade, to have be fresh and sort of clear in your head to be able to withstand the pressures of the markets. But I'm also winning because of just general trading, and I hope you're doing that as well. So what we're gonna do in the next few minutes is that we're gonna be looking at the euro, Bitcoin, gold, crude oil, and the DAX 30. But before we start, I need to stress that trading financial markets unfortunately is risky, and we can lose all of our invested money. And if you trade with leverage, then yeah, you can even lose more than what you invested. So you need to bear that in mind. For more on this, click on the risk disclosure statement at the very bottom of the homepage. Okay, what's next? Well, today we have a special webinar coming up at 1500 hours London time. That is with Nathan. Nathan has been trading for a hedge fund. Nathan has been doing this for quite some time. He started trading in 2006, and he's our newest member of the Trade Captain team. You've probably already seen some of his setups in the technical analysis section. And he's going to be talking today. It's sort of a light conversation about how to improve trading discipline. And it could be worthwhile checking this out, because this guy, he was managing money, and obviously if he traded well, he would eat well, and vice versa. And that's sort of puts things, makes things much more difficult than if you have a full-time job and you trade to make an extra income, rather than trading and making that your main income. Okay, so let's begin. And this is the Swiss franc, and the Swiss franc is trading to the downside. I did share with you guys yesterday on the technical analysis section and as well on my Twitter. I said that dollar Swissy could potentially trade to the downside, and dollar Swiss franc already reached the high here, the May 10th high, well, a few days ago actually. And then it's one of those coins that did not actually soften. The euro went down, the pound dollar went down. I think also even the Aussie dollar and the New Zealand dollar went lower, but this one was being capped. Maybe it's the Swiss National Bank, so the Swiss Central Bank, that is capping price. I'm not really sure, but technically I know that buying up here did not make too much sense. And I'm bearish below the May high, and the market is now drifting to the downside. I've actually been short this market for quite some time already. I think it was on, I think already pretty much here around the May 11th. Around these days I went shorter, then I've just been short for quite some time now. And the market is finally pushing towards my advantage. What is interesting is that it's now trading below the low from should be Friday's low. Yes, Friday's low. So trading below Friday's low, also trading below the May 14th low, so which is last Monday's low, and we're having an acceleration to the downside. There are different ways of sort of deriving a profit target, but support is down at 94.20, and yeah, if we create a major high here, we'll probably be trading down here at one point. But I'm not in the business to hold positions for such a long period, and usually it gets wobbly, becomes much more harder to maintain a position for that long. So I'm just looking for the decline down to pretty much 98. The different ways of deriving profit targets, again, you can just look at the chart. There's no interesting highs or lows here. Sort of the next support is down here at 96, and you have a swing low here. So just took a Fibonacci from that low, and the market is moving to the downside now. And these are the three fibs, so maybe 98.54 and maybe 97.92, but I'm just aiming for 98 really, so just looking for the middle. It is possible, of course, when we start to reach 98 that I can make adjustments, maybe push down the profit target to 97, but most likely it's gonna go down and then it's gonna go all the way up and then down. And this is the problem with these sort of trades anyway, because this is a contrarian trend. This is buying high, usually not the best thing to do, but it's working out right. Working out all right today. Okay, let's take a look at the regular markets we look at here. So here is the euro, and the euro is doing very well today. It's up by well, 32 pips, so not too much. But what is interesting is this. I'll show you the daily chart. So this is the daily. You look at that candle here. This is a bullish candle telling us that traders are booking profits on this downtrend. A bit like this one you see here, similar sort of candle. So after that candle, you had a big bearish day. Now you have bullish candle yesterday, so most likely have a bullish candle here. Now, the way I operate is that I don't necessarily trade all setups. Definitely don't do that. But my way of operating is that I'm gonna stick to a trend until proven otherwise. In other words, until being stopped out. So now we're having a push to the upside, and today you had a push as well, or actually the Australian dollar turned bullish already yesterday. So the Aussie dollar took out its high, pushed to the upside. But if you look at the euro, it's still bearish. I'm treating it as bearish below 19.05. But if you're gonna follow the rules 100%, then you'll treat the trend as bearish below 119.96. Okay. Same thing here with the pound versus the USD. The market, remember it took out support yesterday, and take out support, you should trade to the downside. So you definitely have bearish markets in the pound dollar and in the euro dollar. So even though it's up quite aggressively today, and even though again I'm short the dollar Swiss franc, I do insist on the idea that we should maintain a bearish bias here, and I'm looking for this to trade to the downside as long as it's below 119.05. Now if I had to choose, do I want to be bearish the euro dollar, or do I want to be bearish the pound dollar? I will be bearish the pound dollar. Why? Because you have very, very well defined resistance here. You have the May 10th high at 36.20, and then you have the May 17th high at 135.71, and I think it should be fine and enough with 135.71. Just operating, being bearish below that level. And what is also interesting is that this market, has been trending sideways for quite some time. So it just started, technically it started to trade lower. Of course, I know it traded lower following this move, but it took a long break. It reached this level on May 5th, or May 4th, sorry. So it spent 2 weeks and 1 day just trading sideways until it traded lower. So I prefer this market being bearish rather than the euro. Now this is Bitcoin, and Bitcoin is trading sideways, and I think it's time to put our capital in use in other markets. Obviously, you don't want to deplete the crypto trading account, and of course, if you're trading with a CFD broker like Amana Capital, then you trade cryptos when you want to. You don't have to move money from one account to another. But I don't think we're gonna have too much of an edge or too much happening here in this market. It's clearly to see that the market is just trending sideways, and is capped by the May 14th high and the April 17th low. And I done my homework. I looked at all the top 12 coins, and there's nothing happening here except maybe Tron. So this is Tron. So Tron took out its high, moved up on this daily, and then moved down. And if you want to know more about Tron, then Yuri posted an update on Tron yesterday. I also published an update on Bitcoin Cash, but this is Tron published yesterday at 11:53 London time. So he has a setup here for you, but this is literally the only market, well, not of this, obviously other markets are trending to the upside, but most markets, most of the big markets like Bitcoin Cash, they're all bearish. Of course, if you would have bought down here at 600, you would have a nice gain without a doubt. But guys, I bought as well at these levels, but I ignore the market for most of February, March. So this, we don't just have to buy blindly. You just need to wait for nice technical setups. And the way things, the crypto markets are heading right now, they're just heading down. They're or trading sideways. So we'll be most likely wasting our time here trying to trade these markets. But I think they will come back. I think they just need to go stale. They need to go boring. After a big party, what happens? Yeah, you have to take a few days off, or rest. Sorry, not take a few days off. I don't party that hard any longer. Yeah, but you get the picture, right? This is exactly, this market has a hangover. It's just waiting. It's not just gonna bounce back up, especially not when you had this crazy momentum up here, and like everybody was talking about cryptos. Now here is crude oil, and a few days ago we said take out 71.91. This is gonna head to the upside. So if you trade on the back of that, then yes, you're winning. And I think it's fair just to be bullish above 70.23. If I show you the 4-hour, it makes more sense. And I think if the market goes down to support, I think traders are gonna look to buy. But here, what you want to see is you want to see price just hit 73.25, and then that's it. You can potentially reduce the stop loss to 70.96 at that point. But probably better just to book profit somewhere here. Maybe keep it to 74 or so. But the idea was to buy here, and if you were patient, the market moved to our advantage, and now you're in profit. So why am I focusing on this level? Because this is the last important short-term low. You have another low down here, but right now the market is guided by this short-term uptrend. So here is the price of gold. And gold, I still have good hopes on this. Remember, the euro is technically still bearish. The pound is also bearish. And the reason why I have good hopes for this is that gold is trading sideways since most of 2018. It reached these levels in January 19th, and then it just traded sideways. When you take out support like this, it's difficult to sort of end that, and it's very, very difficult for the market to take out major highs like this daily candle up here. So we had some nice momentum. The idea was to sell here at 1,301. The market moved as low as 1,282, and I think if we go up, I think traders are probably gonna sell here. I think this could potentially continue to trade lower on its own. But again, the euro is bearish, the pound is bearish, so there's no real reason to have any sort of panic here. Now here's the DAX, and the DAX spiked higher. Obviously S&P 400 and other shares are just moving to the upside, and I see absolutely no reason to change our bias here. And of course, there's people that are very good at selling at the highs, and if that's what you do, then go for it. But I'm very good at following the trend, and with that in mind, I'm gonna stick to this bullish trend. The idea a few days ago was that if we take out this high, that happened already on the 17th, which is Thursday last week, then this market was going to be bullish. Went up, down, and spiked up higher. But as long as we're about 12,931, 913, sorry, there's no real reason to change your bias. You can just look at the S&P. The S&P is moving to the upside. A few days ago, I said to my guys, look to buy down here, in a profit here as well. Nasdaq as well, we look to buy down here at 600 and 6,868. It's working out fine as well. But if you look here at the Dow, I think this is gonna do very good as well. The Dow just traded above last week's high after gapping, and yeah, might go down a bit, but something like the Dow, might go out, try to close the gap, but as long as you trade above last week's low. So if you're lucky, you have a bit of a correction. But this, I think, is another 2.44% to the upside to risk just 1%. So I think it's all fair. I think this is probably going to head to the upside, and this will probably translate into the DAX trading higher as well. Of course, with the euro gaining a bit, we never really know. Is it like an amazing setup? You want to bet the farm on this? No. The better ideas were down here. We talked about buying here, talked about buying breakout as well. And we sort of ending the end here, but risk reward wise, you know, if you're long on the back of the breakout from last week, again you're risking 1%, and maybe in 2-3 weeks, worst case, best case maybe 2-3 days, might be up with 2.5. That's 2.5 times your risk, and that is really, really important. The average profit versus your average loss. And obviously, if we take out today's high, then your entry becomes your new stop or new trend defining level. So take out the high, then probably up, and we can probably put the stop loss pretty much where we got involved. And that's important, because if you maintain the profit target, so you go for your profit target, and if you're in a position to reduce your stop loss, quite often, then automatically, because you reduce your stop loss, your average loss becomes smaller, and you get a better risk reward ratio. And you'll get that if you trade with the trend. Okay, this is today's market update. So it's called 600 seconds for a reason. Of course, sometimes I just like to keep on sharing my thoughts and ideas on the market, and that's what we did today. Let me just quickly take a look at the calendar for today. So you have inflation hearings in 38 minutes. Let me see if this is, yes, it is set up correctly. I'm not sure exactly how much this is going to move the markets. I don't think it will move the market too much. But that's out today. Otherwise, there's not too much happening, and that is really important today in the economic calendar. What is important though is this, the webinar. If you want to join that webinar today, just click on education and webinars, and you can sign up to the presentation. As well, if you sign up once, you can sign up to our other webinars as well. Now what happens is that if you register, and the system knows it, but then it gives you the link to go to meeting. But what happens is that the team will usually automatically enroll you if you can't be bothered to enroll yourself. So the system is a little complicated. You log in, you click on a button, and you're being registered, but you're not actually registered to the GoToMeeting link. But the team, what they do is they update things on the back end, so you will receive an invite. If you didn't receive the invite for this webinar already yesterday, then just log in to up here, and you can fill out the details manually if you want to. Okay, we're gonna finish. If you like the presentation, don't forget to hit the like button. It's very straightforward. You just click up here like that and hit that like button like that. Very straightforward. Please help us out if you like us. If you don't, then that's fine. Guys, have a great day, and happy trading. See you guys tomorrow. Thanks.